Yo, what up everyone? In this video, I want to talk about getting paid in trading and how to start making more profits and avoid taking setups which most of the time result in losses and frustration. We all have been there. It's a very simple yet powerful lesson, and I'm going to talk about the psychology backing it, and then I'm going to get into the technicals and show you some trading setups to visually understand it a little bit better. But before we get into it, all I ask is if I provide any value to your trading, if you could leave a thumbs up on this video, I would appreciate it. And if you haven't already followed me on Instagram at Entrepreneurship, I'm going to link it in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you won't find anywhere else. The link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this lesson. Trading is the best job because it gives us the freedom to make an infinite amount of money at any time and anywhere in the world. There's seriously endless opportunities to make an endless amount of money in such a short period of time that no other job offers. With this freedom though, trading is different from every other job because as traders, we do not get paid for the time that we sit in front of the screens. We could watch the market all day long for 6.5 hours and not make a dime. In fact, we could even lose money. So it's different because it's not like we're going to work a normal job and we're getting paid, 20, 30 bucks an hour. As traders, we don't get paid for that time. And in fact, the time that we sit in front of the screens all day long might be counterintuitive. It's like a casino. The longer the time that you sit in the casino, the more you're going to lose, the more you're going to force stuff, and the more you're going to gamble. So we have to be very cautious with our time. So I don't really classify getting paid in trading with our time. We get paid truly for our opportunity. Fix your mindset a little bit and understand that the opportunity that we perceive or the opportunity that we create is the only way we're going to get paid as a trader in the market. Now, because of this, our emotions sometimes will cloud our judgment and trick us into what we consider opportunity because of human emotions such as fear and greed, which naturally attach us to the money side of trading. A lot of traders have the wrong approach to trading. They attach themselves to the money, they gamble, it's like a casino, and eventually they lose. They do not perceive opportunity, and they don't understand that opportunity equals freedom, which equals profits, and equals results. Because of this, our emotions get in the way, and they cloud our judgment. And before I get into the first trade that I took, I want to make this very clear. For myself, volatility brings opportunity. I take the best trades when there is volatility because it brings opportunity. And whenever I see opportunity in the market, I basically see a high quality trading setup. Anything other than a high quality setup, to me, is not proper opportunity that I should be taking. A lot of people think they see opportunity, but it's really not a high quality setup, and they take the trade and it's something that they could have avoided. How I avoid the setups is I look for balanced or low volatile conditions because those really do not bring much opportunity based on how I trade. Balanced, low volatile conditions bring not many high quality trading setups, and balanced, low volatility conditions are ones that I usually lose the most on. Going over the first setup, let's get some context from the pre-market plan. I post these every single day in my Discord, which is included and only available for Entrepreneurship course members. Link below. So this is going to be on the S&P 500. What I go over is relatable to no matter what market or what stock you trade. The concepts still apply. This was on the S&P 500, and we had a bullish plan, which we were rallying overnight. And the plan was working out pretty perfectly as long as we held above the 45.20. And we were rallying right inside of this supply up here at 45.67 and 45.74. So I said it's very, very key. And number one scenario was if sellers are responsive at supply, we look to play a bearish position. They reject price and or aggressive selling. I am open to playing puts targeting the demand lower at 45.32 and 45.10. Now, why this is important, because we have to go back to this right here about trading based on where we see opportunity. I said I do not see any opportunity in balanced or low volatile conditions. The market opened up, and I have a certain criteria of what I consider to be balanced, or kind of spot it as it's happening or right before it's going to happen. And as the market was developing in the first 30 minutes to even an hour, we were definitely in balanced conditions. And those for me are avoidable because I don't really find high quality setups. So from the pre-market plan, I was looking to short or play puts at the 45.67 supply zone. And even in the intraday commentary tab, this is the tab that I update my thought process as the market's developing in real time. I was telling members, you could pause the screen if you'd like, that you have to, if you can't properly read the market or you don't know how you feel about a move, then don't trade it. I always think that the market's going to be here tomorrow. It'll be here the next day. It'll be here next week. So, you don't have to take every single trading setup. You have to take ones that you consider high quality. In my opinion, I did not consider this a high quality setup, playing a bearish position at the supply zone due to the overnight action and due to how we were trading in the first hour of the market opened up. And even in the Discord, I said, right now we're at supply. Part of me wants to short the move and part of me wants to avoid it because buyers are strong and we were rallying into this level. I said, when I feel like that, I simply don't trade it because I know it could work either way. If it works in my favor, good. If it doesn't work out and I would have lost, I protected myself and made the right decision because I wasn't comfortable trading it. So right then and there, I said, basically saying that these are not the best conditions. I'm not comfortable shorting this. And what did I do? I played puts, I shorted it, and I made an emotional decision because my judgment was clouded. My brain was telling me to take the trade, although I really didn't perceive opportunity out of this setup. Remember, we get paid for our opportunity. So I forced this trade. I consider this to be a gamble. These are conditions that I have to avoid. And it was given. We rallied into the supply above, and then I stopped out later in the day when we broke the high. I even did a trade review in the Discord, basically saying I'd rather not take the trade when I feel 50-50 about it. When you feel 50-50, then it's not a high quality setup. Because a high quality setup, you feel 100% of it. So I said right off the bat, I should have avoided. I should have never entered it. Exactly what I explained in the Discord. I contradicted myself and I entered the trade and I knew it was going to work out right away. Now, the analysis worked out well because we just mistimed it. The following day, we had the CPI numbers and the market was selling off right into demand lower. So now this is Thursday, February 10th. And price precedes news, meaning news comes out when we're inside of a supply zone. The unfilled sell orders get filled, and then the market drops. So that goes to show you the power of supply and demand. Our analysis was correct. We just mistimed the market, and we got to dump the following pre-market into the demand lower. Now, the following day, this day was filled with opportunities, many ways to make money. So I want to go over the pre-market plan on this. But first, I want to get into this right here. This is a quote from Brett Steinberger. He's the best trading psychologist. He basically said, when you're running your trading business well, you do not take every conceivable opportunity to make money. You wait for your highest probability opportunities. The clearer you are about your risk to reward, the easier it will be to stick to the trades that offer favorable expected returns. You do not have to take every opportunity to make money. I see traders making trades blindly. They are gambling just because something's moving up or just because something is moving down. You have to trade based off of your edge because your edge gives you the best opportunity with the highest quality of setups. So when you accept this and you realize this, that it's all about trading quality and only trading your edge, you're going to be able to accept and realize that you do not need to take every opportunity in the market in order to make money. You have to be patient to wait for your highest probability opportunities. And to take high quality trades, you need to accept not taking some trading setups, which are lower medium quality, that end up not working out to begin with. Or just accept low medium or low to medium quality setups, which do end up working out. You missed it. There always will be another opportunity. That example from yesterday was a really low quality setup, yet I still took it. I'm okay with not taking it even if my analysis works out, because I know there will always be another opportunity in the market. Market ain't going nowhere. So then the following day on the S&P, we had that sell off from the CPI numbers, demand below, that I said if we could hold or bid above the 45.32, 45.10 demand, which is key, a balanced day or a rally back into the overnight highs and key supply is possible. So that sell off overnight actually formed new supply as the market dropped. I removed the one from yesterday, and I was on voice chat all today, or on February 10th on Thursday. And what I was saying was that this area, this drop into demand, as long as we could get a strong buying rally with new demand forms, I am open to playing puts. So I'm going to go to a 1-minute chart, and I want you all to understand that after a massive sell-off to the downside, once shorts cover, they're going to fuel a move higher. So we were watching the tape. There was some very aggressive buying coming in as the market opened up, and the market cannot sustain on a short covering rally, meaning we must see new buying in the market for that rally to sustain. So this drop after the news formed supply up here near the highs. I'm just going to mark it right now as a green box. And then this drop to the downside with the supporting rally actually formed new demand in this area right here by this green box. So I played SPY calls. Look at the volatility that we saw today, right? In the first 20 minutes of the market open, we traded in a 35-point range. Whereas yesterday, I don't even think we moved in a 35-point range. And in the first 15 minutes today, we saw that immediately. So now we had demand forming, and I was speculating that it was going to form, right? I was speculating that this rally was going to hold. We had some resistance at VWAP. This is very similar action to what we've seen in the past, all about recognizing same patterns, speculating that new demand was going to form, and nothing stopping from buyers rallying us into about the 4570 area. As soon as we got above VWAP, this flag, if you are watching the tape, you're going to know exactly what I'm talking about. Time and sales level 2. There was some very aggressive buying, wiping out some passive sellers, strong buying, new demand on the way up, new buying fueled this move. I got in long at 45.50, stop below the low at 45.40, targeting 45.70, about a 2-to-1 risk to reward, not bad at all. Flagged out, consolidated, got a quick push up. I sold about 3 points sooner than my target just to protect myself. And we rallied right into 4570. We pulled back a little bit and then came into the supply zone. So, I could go over this chart and show you tons of opportunities. But remember what I said earlier in the video? Volatility brings opportunity. Opportunity brings high quality trading setups. Today was full of setups that you could have taken. I only took one trade. On the S&P, I took another trade, which I consider high quality. I'm going to get into that. But there were tons of setups because there was tons of opportunity. Compare a day like today to a day like yesterday and just look at the action. Look at the difference. Tons of opportunity. You have to trade when you perceive the opportunity. Don't just trade because you want to trade. Don't just trade because you want to make money. Trade when you see your opportunity. And if you don't know what your opportunity is, you got a lot of learning to do and you got a lot of studying to develop your edge. I could show you another trade was we failed to break above the high inside of supply. We dipped down, had somewhat of an inverse head and shoulders pattern, kept dipping down. And that demand that I mentioned earlier in this area, right, we'll just call it like right here, got tested. We temporarily bounced at it, failed. Maybe you could look to play short, target the next demand zone lower, bounced at it temporarily, found no buyers. You could play maybe more to the downside like that. You could play it long on the way up, just like I did. The point I'm trying to make was there were tons of opportunities with solid theses, solid definitive background to why you should have taken the trade. Not just because the market was moving down or, not just because the market was moving down on news or it was moving up. You have to give yourself a solid thesis and come up with a solid trading plan. A setup that I took, and I lost on this setup as well. Great trade. I'll take this 10 out of 10 times. It was a high quality trading setup. We were watching a $50 key level breakout. Tape was very strong above 50. I took it long above 50 and immediately failed and I got out of my position. But I will take this trade 10 out of 10 times because I know 7 out of 10 of those, they're going to be winners. And my risk is very small compared to my reward. So this was a nice setup. I stopped out before that big dump, but it just goes to show you that, this is opportunity, but sometimes opportunity doesn't work out. I'd rather take a setup that presents opportunity and it doesn't work out versus taking a setup that has no opportunity, forcing it and taking a losing trade, because then we get frustrated and that frustration becomes present in our next few trades and we struggle because we have FOMO, we have fear, we have greed, and subconsciously it affects us. So listen to everything I'm saying is the truth. We get paid for our opportunity. You have to be able to define opportunity for yourself. And that's what comes with proper education and learning your edge properly and knowing the right mechanics to the market. Understand that if you are a gambler, you should go to the casino. You shouldn't even be trading, because you have to realize you just trade your edge only, because your edge will consistently make you money in the long run. You don't need to take every opportunity to make money either. So I'm going to leave you all off on that note. If you enjoyed this video, you learned something, drop a like, comment if you have any questions, and check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra cost. The tape reading section I added about a month ago. I've been getting very good feedback about that, and I've been using the voice chat feature a lot more frequently. So definitely join the team. It is worth the value. But I'm ending it on that note. Peace.